Hi, I'm the Action Network sports betting reporter, Sam McQuillan. Many states have legalized sports betting in the last year, so many of our subscribers have just started to bet legally. Now that it's tax season, you're probably wondering what you have to report to the IRS. Can you deduct your losses? Can you deduct your Action Network Pro subscription? Well, to answer all your questions, I'm speaking with Richard Gartland. He has over 3 decades of financial management experience as a CFO for a consulting firm, and then working for a very well-known tax preparation company. He's now retired from finance, but you might recognize him as an actor in several national TV commercials. Thanks so much for joining us today, Richard. The first question I have for you is something I get from everyone is, can I write off my losses?
Yes and no. And to what extent? So the yes is for the casual bettor, yes, you can write off your losses only if you're itemizing your deductions. Again, since the last tax changes, many people are not doing that anymore. So in that case, no, you can't. And then to what extent? So in any event, you can never write off more than you want. So for those guys, like pretty much everybody I know, if you bet $1,000 over the course of the year and you win 500, you win 400, you've got 600 in losses. You can write off the 400, but the other 2 disappear.
So short answer, no for most casual bettors. For pro bettors, up to how much you win.
Most people are going to fall into the casual bettor mode. To be a professional gambler, it must be your chief source of income. So the way they word it is backwards. They say you must not have other significant forms of income. But basically what it's telling you is you've got to be doing this for a living. Casual equates to being a hobby, and it's treated like any other hobby that you might have for the IRS purposes. So the pro bettor files a business return within his 1040. So all of this happens on your 1040 tax form. The 1040 for the pro bettor, he's going to file a Schedule C, which is self-employment income. And they will be listing both their winnings and all of their expenses associated with the bets, which is not only the wagers, and that includes wagers that are lost, obviously, but also travel expenses and other potential related expenses.
Is there a sort of a cutoff, a threshold when you have to start reporting, or does the IRS want everyone to report their winnings?
So the IRS's position is that all income is reportable. All earnings are reportable.
Right. Everyone has to report their sports betting
winnings. Everyone has
winnings.
to report. Yeah. Now, when I was doing taxes, the next question that came up, how will they know?
That's a great question.
It is a great question. And in your case, if you won, $10 on an office pool, chances are they're not going to know. Now, that doesn't relieve you of the obligation. I'm not suggesting anybody not report any income. If you're betting through online services, or if you're going to casinos or off-track betting venues, if you earn more than $600 in the course of the year, it's not bet by bet, but if you earn more than $600 in the course of the year, they will issue you some form of 1099, or in some cases, another document called a W-2G. W-2Gs generally come out of casinos. And they will be sending a copy of that to the IRS. The tax is payable at your ordinary income rate. So that's a rate that has tiers associated with it. So what we call it is the marginal rate. Whatever your marginal rate, that's what this will be taxed at.
Is there a threshold of money where they start withholding your taxes from your winnings?
Generally at $5,000. So if again, it's cumulative. So over the course of the year,
not just one bet.
Not just one bet. If your earnings hit $5,000, you will be subject to, I think it's 24% is the standard withholding. You can, in some cases, ask them for more. You can also, typically, you can claim to be not subject to withholding. That's just a form you would have to fill out. How they know that, by the way, is when you register with these companies, they are going to ask you to fill out to submit some documentation, normally your social security number,
right, when you sign
as well as your name and address when you sign up. So that's how they know.
So if that money's already getting taken out of your winnings, do you report that on your tax returns at all? Hey, they already took this money out.
This is a deposit against your liability. It's exactly the same as if you're getting a paycheck from a company and they're taking deductions out of it. They are withholding federal tax against your tax liability. If you're using a tax prep software, which many people do, it's going to prompt you to do that. If you're filling in a 1099, it's going to ask you about withholding, and it will put it in the proper place. But you should know to look for that. It's typically on the last page of your 1040, where you'll see your actual tax, less taxes on deposit, and then a net tax or refund due.
If I make $100 bet and win $100 and I get paid out my 200, which includes, what I put up front as well as the winnings, is that entire 200 getting taxed?
It is only the winnings that are taxed. Think of it as an investment. If you were to buy a stock and you paid $100 for the stock and you sold it for $200, you'd be paying on the gain.
A lot of people are traveling now during the pandemic. How do you have to report it when it comes to state treatment? Let's
talk about the state where you live first. So again, we're talking about the IRS with your 1040, but this income is also taxable at the state level. California, for instance, as do many states, are taxing your worldwide income, just as the IRS is. So
money you make everywhere.
They don't care whether I made the money in New York, or California doesn't care whether I made the money in New York or Nevada or Texas or Louisiana. It's still taxable to California. Let's say I go to New York and I make a few bets and I win. So I need to report that to the state of New York, because the winnings are deemed to be earned where the bet is placed. Typically what happens to avoid double taxation is that when I report my California return, I'm going to claim an exemption for taxes paid to another state. And if the way it generally works is if what I paid New York is less than what I would have paid California, I pay California the difference, right? So let's say New York, I win $5,000 and they take 10% in tax. So $500 gets paid out to New York. So if my tax rate in California is 11%, $550, I get to deduct the $500 I paid. If California is 9%, less than that, I'm just out of luck. I won't pay any more to California, but I will only deduct the $500 that I paid to New York. The potential is for people who are moving around a bunch or like to gamble while they're on vacation, is you could potentially end up having to file multiple state returns. And for somebody who's got a bunch of that, I would suggest they pay somebody to do their taxes. It's probably worth it if it's significant amount of money.
Yeah.
If not, through the big 2 or 3 tax prep programs that a lot of people use, you can pay for and download multiple state returns, and they will pretty much flow. Everything flows from your federal return. So once you have it in your federal return, and for instance, if I get a 1099 out of New York, or if I get a 1099 out of Louisiana, when I feed that into my federal return, I'm identifying where it's earned. As part of the process, I'm telling it that. And then the programs the good ones are very good about filtering that through, so that when I pull up a Louisiana return, it's going to, actually what it does is Louisiana wants to see all of my income. And then they generally, for a non-resident return, they subtract everything that's not theirs. The reason they do that is they want to tax you at the marginal rate of your income. Earnings of $5,000, there may be no state tax due. But if my overall earnings are $110,000, including the $5,000 from them, they want to charge me at the marginal rate for $110,000.
Well, Richard, anything else you think is important for sports bettors to know when filing their taxes, when considering this sort of stuff?
Keep in mind that if you're over that 600, if you ever get a document, you should be receiving a document. If you ever get a document, the IRS is also getting a copy. And in most cases, states are getting copies as well. They get them not from the payor, not from the guy who's paying out, but they get them from the IRS.
The lesson is report everything, but at $600, that's when the IRS will know.
Yeah. I think the other thing, when do you pay? So in the case of winning something that's paid out across a year. So you make a bet at the end of the year and it pays out in January. It's going to be, you put it off until the following year. We are, as individual taxpayers, we work on what's called the cash basis, which means if you didn't get it in your hand, it's not earnings for that year. So
it's when you
that's
get paid.
That's the other thing. It's when you get paid. Yeah.
And these are the sorts of things like, if I bet on my favorite football team, the New Orleans Saints, $10 to win 500 to win the Super Bowl. I'm betting on them now, and it's March, and Super Bowl is going to happen in February. So that's almost a year from now I get paid out, even though I'm putting the money up front now.
Right. So that would be a 23. That would be
all about
23,
when you get paid.
2023 earnings. Yeah. We're on a cash basis.